Jamie Perez, senior analyst at RF Lafferty. Jamie's got a buy rating, $35 price target. Jamie, were you expecting that announcement about a capital raise?
No, not the capital raise, but I was expecting production delays. That's something that they've done before, and the fact that Elon Musk mentions all the time, it's hard to take a car from concept to production. So what I'm a little bit surprised is that the dramatic decrease in the production cut, 50% of prior expectations. That's a little bit disappointing right there.
What do you think is going on here?
It's probably harder. It's like I said, Elon Musk always says that producing a car is the hardest thing in the world. And I think Lordstown probably came out with high expectations after the SPAC, but then realizing producing a car from concept to production is a lot harder than it looks. So it looks like there's a few bumps along the road as far as the production schedule, which is something we expected, but we did expect at least a company to meet its third quarter production guidance. But this is pretty much below expectations.
So what are you going to be listening out for on the call, and as to weigh up if you're going to keep your $35 price target or not?
All right, what I'm going to be listening to the call is the update on why the production is so low, and are they going to be able to meet the full capacity of 60,000 vehicles? That's what's key. And also, any update as far as prototypes, any testing, any update in pre-production. You can expect them, of course, to start increasing CapEx, but the fact that originally they purchased a General Motors plant and they just had to retrofit it is something a little bit disconcerting, that margins might be further downward. So that's some of the things that I'm looking at on the call.
Well, besides the individual issues, the market has just kind of turned on these companies, Jamie. Your price target wouldn't have looked so crazy high back in, February, right, when this was a $30 stock. It's now trading below 10. So do you have to adjust to the market expectations? We've seen a huge drop-off in a lot of these names, Fisker, some of the others, related to inflation and higher rates and a lot of other things.
Right, but remember, most price targets, including mine, are not set for 2021, but 2022, 23, when these companies promise to produce vehicles. So right now, they're not generating revenue, so you can't really put a price target in negative revenues. So, so the key question is what they're going to produce for 2022 when the price targets are actually used.
Shepard Smith here. Thanks for watching CNBC on YouTube.